now we're going to be talking about the vertical analysis. Okay, so this is also very easy to do. We're not going to be comparing information across time, so we really only need 1 year in this case. But think of a vertical line up and down. We're just going to be using 1 year's worth and comparing every number to a base amount. This is also called common size analysis or vertical analysis. So you'll see both words used interchangeably with each other. Okay, so to find this, you take whatever account we're looking at and you divide it by a base amount. So I'll kind of let you know in a moment what the base amount would be, and then you turn it into a percent by multiplying it by 100. So if we're talking about a balance sheet, the base amount would either be your total assets or your total liabilities, and that should say and equity, because basically your total assets have to equal your liabilities and equity. So whichever number you use, it's going to be the same number. So usually I just look at total assets, or I just go to the bottom line, the liabilities and equity added together. Okay, if we're looking at an income statement, it's going to be your total sales number or your total revenue. It'd be the number at the top. That's going to be your base, and we're just going to take every other number below that and divide it by that base amount. So the purpose is really to see on like a balance sheet, out of all of my assets, how is it broken up? How much of my assets are cash? How much are investments? How much is my land and my buildings and my PP&E? When looking at an income statement, we're going to be looking at sales, your total sales, and where did that all go? To which expenses were the highest? How much did I get to keep as my net income based on what my total sales are? So this is a really good indicator as well as how a company is doing. In this case here, it's going to be an income statement. Okay, so it says income statement here. So remember, the base for an income statement would be your sales or your revenue, whatever they call it. So this here is our base. So put a little star next to it. Basically, we're going to take every single number here and divide it by that base number. So the base is always going to be 100% because it's itself divided by itself. So 100%. So the rest of these, we need a calculator. So cost of goods sold, you're just going to take this number divided by the base, the 740,000. So 560,300 divided by 740,000. Remember, multiply that by 100. I got 75 point, and it keeps going. So I'll just do one decimal place. 75.7%. Just a couple other little pointers to bring up when it comes to the vertical analysis or the common size analysis that they call it, is you can also make this visually a little bit nicer looking. So here we have the income statement. They're showing it like a pie chart. The whole thing would be 100%. It would be my total sales and how it's broken up. See, like 50, in this case, 59, almost 60% went to cost of sales. This orange part right here is how much I got to keep as net income. So that's a pretty nice little chunk. And then where all of my other money went. Here it is by looking at the assets. So the whole thing, so this is just like another way they can represent it. I'm not going to make you do any visual graphics or anything, but this is just information we'll show you. Out of all of my assets, it's broken up into different colors on where everything went.